Thanks for reminding me. What's up, guys? Welcome to another live session. Today is February 3rd, 2020, and we're back in on the charts. Thanks for that reminder, Dre. Um, we're going to cover three things today, fundamentals and a few majors, but three fundamentals I want to talk about is the post-Brexit plans, the coronavirus, which is continuing to grow, and number three, the ISMI manufacturing data. We'll start off with the manufacturing data, which came out this morning for the dollar, and is actually at 10 a.m. Eastern. This is an hour behind, but basically we came out at 50.9, which is better than expected and better than the previous month, so that's great. And it's basically, just to go over it quick, it's a level of diffusion index based on surveyed purchasing managers in the manufacturing industry. Actual greater than forecast is good, but actually above 50 indicates industry expansion, below indicates contraction. If you read this, it's a leading indicator of economic health. And so this is really good for the dollar, especially that we're bullish. We have a long-term bullish bias on the dollar, and this is a great start for quarter one. So this is why you can see all across the board, a lot of the majors are slipping against the dollar. As you can see, the euro, although it's pulling back, but some pairs are slipping more so than the others, and we'll go over why. Another thing is the post-Brexit ordeal. So Daily FX has a pretty good article, but basically has given back all its Friday's gains and more as the EU and the UK lay out their plans for the post-Brexit trade negotiations. So if you guys check on pound USD, which we'll actually pull up, Friday it was on a mission to go higher. This was our personal idea, not an idea, but prediction more so if we continue this bullish rally. But then the talks of saying, okay, Brexit has happened, what are we going to do now? And this is where the trade talks between the European Union and the UK will linger for months, weeks on in, and it's going to cause some people are going to realize that, hey, Brexit's not all fine and dandy. We're going to have to get some trade partners, and Trump wants to become one of the biggest trade partners for the UK. He wants to create the biggest trade deal in history, and so we'll see how that goes. But for us, as we're concerned right now, our pound USD long-term short bias is looking good. So we made these predictions back in January, December 20th, I believe. And you can see right now we are coming back within our little wedge, our trend line. And if you go all the way down here, we do have our short bias to make new lows for the pound dollar. So we'll take a look at that. And then the coronavirus. So a lot of you are wondering why the Aussie dollar is so affected and so weak. It's mainly because of the coronavirus. So if you read, so it's heavily the Australian dollar is heavily weighted down by the virus-linked risk aversion. However, it has already fallen a long way. If domestic interest rates stay on hold, there could be some support for it this week. So we do have a lot of fundamentals this week, especially NFP. So we'll cover that. Like I said, a lot of stuff. But if you want to look at coronavirus, the numbers are increasing. If you can kind of see the way it's spread. Obviously, China very much involved, and then you have Australia as well. You can kind of see it's moving in a westward direction. So Europe has a bunch of cases now. I think U.S. has 9. You can see on the 9. We have 9 in the U.S. So it's definitely pretty crazy, and there's a 2% death rate, but that's not the scary part. The scary part is how contagious it is. I believe one person can contage, I think, 14 people on average. So it's much more contagious than SARS, and that's where the hysteria is lying. Definitely contamination and isolation is needed to keep this contained, but it is growing. You can also see total deaths and recovered. So there is a good recovery. More people recover than die, but that's still a large amount of people that are dying. Anyways, so those are the things that are involving the Forex market this week, and then obviously if we go through the Forex schedule, Tuesday, tomorrow, we have some NSD and employment, and I am looking to continue our short for NSD USD. And then we have Wednesday come around, we have Euro USD, President Lagarde speaks, ADP. So this is going to be kind of a prediction for the non-farm numbers, and we have some more non-manufacturing PMI. It's looking like it's going to come out just a tad bit better than the past month. So key economic indicators, if this is good as well, then we're good to go. As well as ADP. So very, very important week for the dollar. Let's go to, so we have some monetary policy statement for Aussie, don't think it's too important. Just because we already had the monetary policy, and then Friday, obviously NFP. So, looking at the data forecast, we're expected to add more jobs, about 12K more jobs than the past month. Unemployment should remain the same, and average hourly earnings is also expected to be better. So all across the board, the dollar is expected to be better than forecasted. So that's going to be good for us, really good for us. So going on to the technicals, just a quick reminder, the portal chat is down, so chat with me on YouTube. Thank you very much. Hopefully you guys had a great weekend. Yeah, smash the like button. Since we're all on YouTube now, smash the like button, subscribe, and leave a comment. We'll be choosing another winner. Last week, a winner was actually emailed. I believe it was Igor. Igor won our last giveaway because he subscribed to a bunch of our, to our channel. He liked a bunch of our videos and left a few comments. So Igor won a free month in the trade room. So this could be you. All you have to do is like, subscribe, and comment, and you can be entered. So awesome. Now, in terms of technicals, we'll start off with Euro USD. So we had a pretty solid short from here, and then we had a rebound from daily support, which you can see right here. Now, we had a sharp pullback from the manufacturing data. Now, me personally, I don't want to enter Euro USD right now, especially since we're kind of struggling at this level right here. We're printing a pretty solid hammer. And, we only go after bullish or bearish closures. And obviously, this is not a good point to enter. So, if anything, I'm going to remove this old short idea. Hopefully, everyone took that. We would want to wait for something that's a bit more solid, maybe a closure back below this previous level that we're struggling at to take us down back to here. Just because this could be it's the swing low before it makes another high up to here, and then during NFP this could happen. So we can go back up to here, and then when Friday's NFP results come off, we could come all the way back down here. So it's never good to get in on the middle of a big move. You want to always wait for some sort of confirmation. And on the 1 hour, you can see why we're struggling. So on the 1 hour, we're struggling at this level. And just to confirm, this is a continuation move down. We would want some closure below this level. I'm not really going to give a stop loss and take profit for this because it's not really ready yet. And there's also a few setups that I think are ready to go right now or maybe later in the day. But this is what you can see. I guess I'll put an alert just to get notified if this does end up happening. But do be aware that market's probably already priced in the NFP numbers, so we could see a fallout even before the NFP. So pound USD, I mean a huge gap down and then just straight sell off. I mean this is probably 12 straight bear candles. But for us, obviously we missed this big move, and I don't really trade Sundays anyways. But if you can see big picture wise. We're well in line with our long-term short for this pair. All we need to do is clear the support at 1.29660. I'm gonna leave my mouse frozen so you guys can record that down. Pretty solid support, and all of these setups are on our YouTube channel. Just type in Forex Lens Bull predictions, and you'll see these levels plotted from top to bottom. But we just need that break of support. You can see the monthly looks pretty damn good. So if I was a betting man, which I am, this is a pretty solid short. If you're a swing trader and you're just looking at these two zones right here, more often than not, this is a pretty damn good short. You did have this one instance where I can say you had a pretty decent monthly closure, but then buyers came back in. We can see this closure was a bit of a hammer. This is a classic hammer. But this one right here did lead us to a short down to this support zone. And this recent monthly candle is closing very bearish. So this could be a confirmation candle for us to go lower. Like I said, we do want this closure below 1.29660 to take us to kind of confirm that move. And so in terms of a long-term perspective, we're looking good. Even our long-term trend line, which is over here, dating all the way back to 2008, is still standing its ground. So I do have a long-term short bearish, and we're going to trade with that trend. And so for us personally, we're just going to wait patiently for that break We know pound dollar moves very, very quickly, very chaotic, and so we could have that closure even by the end of the day. And a very, very nice short setup. All we're going to look for is a bearish closure on the 4-hour time frame. And I mean this 4-hour, not the 1-hour, because you can easily get faked out for the pound dollar. So I want the 4-hour closure to be bearish. And we could obviously have an intraday setup like this, 2.69, which is great. And if you're looking for take profit levels, one would be right around here, where we've created this kind of support down here, and the next one would be somewhere here. This chart will be sent on Telegram in my setups channel, but this is what we're looking for. And bearish closure, we went through this many times. There's actually an infographic on our Instagram with bearish and bullish closures. If it's not up already, I'll post it after this session so you guys can get a nice tool to refer to when I mean bearish closure. But this is not a bearish closure. This is an indecision candle, equal to the top and bottom, and that's why we didn't have a sell-off. We had a nice fake out and a rally back up. So look for a fat bearish candle like this one or even this one to confirm that move. But this is my opinion for pound dollar. And the fundamentals for the dollar this week are going to be heavily influenced on whether this move happens or not, obviously so. Because the trade talks between the European Union and the UK will be ongoing. It's not going to be done this week. I expect it to take a few months as both sides are hard-headed. Another setup that was promising, and we did enter on Thursday, but we got it on Friday, was NSD USD, which took forever to get activated. But nonetheless, it gave us around 20 to 30 pips. Now we're looking for another entry again. And to be honest, you could enter now. Let me just check the 1 hour. Actually, the 1 hour provided us a perfect entry point. So if you guys remember, we entered somewhere here. Now I'm going to remove the old trade idea. So the 1 hour has created some support. You guys could probably already tell where that support is. And very similar to our strategy, a break below that support and we're headed lower. So I'm just get a horizontal array, and you can see the support that we've created here. Boom, 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 boom. Makes pretty good sense. And you can also see we've created a resistance here as well. So a nice hourly support and resistance, which makes it easier for us to determine our stop loss. So if we get a break somewhere below here, we know our stop loss could be above this level, and our take profit was the one originally planned on the daily time frame. So very simple. And right now the markets are selling off. It's a bear market right now, even for stocks. So that's why a lot of our trade setups are shorts. That's just the way the market is with the Brexit, coronavirus, and then you have things like geopolitical stuff happening in Iran, and so it's going to be pretty crazy. But it's a bear market, so you go with the market. And so this is the potential setup we have for this week. Hopefully it moves a lot quicker than our past few shorts, but it's not really up to us, although we do have some NSD employment data tomorrow, so that could be a nice catalyst. Let's actually look at the forecast for that. So on Tuesday we have unemployment change, unemployment rate. Let's see. So employment change is going to go up a bit. Unemployment is going to be the same. That's the forecast. So these aren't standstill predictions. They could change, but that's interesting. So obviously we want to expect numbers worse than this for our short, but who knows? The forecast can remain as it is, and the actual could be a lot worse. Good morning, Rita. Good morning, Samir. Jared, Big G Dub, what's up? Let me actually say good morning to everyone. Marco, Edward. Is gold going uptrend and U.S. oil will go down? I'll give a look at those. But long term, I do think gold will go up. I don't want to enter any intraday shorts for it just yet. But so I'm going to save this if I haven't already, and send this through on Telegram as well. So next up is Aussie dollar, and this was a setup that we had to be careful with last week because this hourly support that we're kind of at is kind of tricky to trade. So you can kind of see what we're talking about. This hourly support, these long wicks, long wicks in this area, right where my mouse is, 0.66978 or 0.67 thousand. And you can see on Friday we finally broke through. and currently we're retesting that area. This is perfect to enter. As you can see on the daily, we did get that bearish body closure below that level. In the past, we were only able to wick below that level, but finally we got that bearish body closure, and that's awesome for us. And currently the daily candle is retesting it, so this is perfect. This is the setup I wanted to enter maybe today, or at least later today. So you kind of see it's similar to NSD USD. We've kind of created a support on the hourly, and I'm just going to slide this trade idea over. So you can kind of see the 1 hour support we've created. Let me expand this out so you can see. So somewhere here you can see the same little support we've created, and even the little resistance we've created. So it's pretty cute how they're just mimicking each other, but this is what we have. So all we're going to need is a bearish closure below, and we're good to go. Obviously our stop loss could be a bit better. I think that's a good place. Because oftentimes you will see price, and you notice this if you're on the charts, is let's say you have a downtrend, right? You could have price actually go up to make a high above the previous significant high, and then short like crazy, just sell off. And so the markets know this. They know people follow higher highs and higher lows, and so sometimes they might throw you a curveball and make a new high, and then you might think it's an uptrend and then just fake you out. So do be cautious of that. That's where our stop loss is a bit higher than expected, but our risk to reward is still pretty phenomenal. So I'm just going to slide the trade idea over. I'll pop back to the daily so you guys can get the trade idea and all this clarity. And this is what we have. So entry would be somewhere around 0. Let's expand this out. 0.66807. Okay, 0.66807. And take profit would be 0.67396. I mean stop loss would be 0.67396, and we'll take profits every 25 to 30 pips for Aussie dollar. So I'll just plot those down as well and send in the full trade idea. Now I would refer to levels in the past, but we haven't gone this low in Aussie dollar in I think a few years. Yeah, that's correct. We haven't gone this low in a few years since, let's actually check how long. Since 09 we haven't been this low. So that's why I'm not really using past levels, but since 09 Aussie dollar hasn't been this low. So you kind of understand why I'm kind of using a rough estimate for our take profit levels. But yeah, we're going to make some real new lows, at least for the past 2 decades. So these are the first 3 take profit levels we'll look after, and then once we clear these, we can look for some more down here. We'll take a closer look, but this is the trade idea itself, and I'm going to save this as well, and this will be sent. So if you guys have any comments or questions about what I'm doing, please let me know. I might move fast sometimes, and if you need some things repeated, let me know. I'm more than happy to repeat myself. So we have a few solid setups covered. At this point, I want to look at USD CAD, and then we can look at gold and US oil as per recommendations. And then I think we should be good. And then at the end of the session, I'll give a 25% off coupon code for those that are interested. So yes, USD CAD, yeah, awesome. We had this. Oh wow, this entry was, when was this entry? This morning at 5 a.m. Eh, bud? That is crazy, eh? Damn it! This was the trade we were supposed to enter. Like we're gonna enter this Monday on Friday. We analyzed this on Friday. We wanted to enter this on Monday, but yeah, man, it's probably gonna go to 1.33500, 1.33300. That's your exact take profit level. Oh shit! Excuse my French, but damn, I'm actually upset. This is solid. Even the hourly closure, which happened just an hour ago, very bullish, well on its way. This is the entry we're looking for, bullish closure. And man, it might be just 60 pips away. Damn, Edward, I hope you caught this. I didn't. I don't think anyone did. This came out of nowhere. I thought we would have a chance during the session to maybe enter, but the manufacturing data just popped it up. and now it's gonna rocket. So I don't know. It's already halfway there. We have 60 pips to go. Maybe we can wait for some sort of retrace. I don't know if we'll even get that. Damn, that looks good. Yeah. So I know this is the long shot, but there is some sort of hourly resistance here, hourly resistance, hourly support here. So we are currently struggling to close above this level. So maybe we could take it from here to there. And what I mean by that is, maybe a retrace back here, and then we take the next move up. But yeah, we definitely missed a significant move, but hey, some people caught it, but god damn it, man. This just hurts. I mean, we don't trade news all the time, but we can get a pullback. So for those that have this chart, just plot this extra level down. 1.32, 700 will be good enough. You can kind of see where I'm struggling to close above, pretty bullish. So we'll probably get a retest back to this level. And all we're looking for, and I've said this before, someone wanted some clarification. What is a break, retest, rejection? So this is the obvious break of this level, right? This break above. And this if we get a candle going back down to this blue line, that's a retest, and a rejection is any candle that closes above this high, above this wick. And so I'm trying to draw these candles. I know it's going to be messy, but I feel like giving a visual is the best way. So this could be the retest candle right here. Right, this little bearish candle. This is the retest. Okay, come on. So this is a retest, and then the rejection candle will have to clear both highs. So clear the high of this retest candle and the break, and then we'll take this movement. Oops. We'll then take this movement higher. Okay, somewhere to here. Hopefully that makes sense. So we'll wait it out. We have a lot of volatility and fundamentals this week, so there's always going to be a movement to catch. We'll just see which one we'll catch. NSD, USD, and Aussie dollar will be blockbuster trades, so that's fine. So this is a new trade idea we're looking for. I'll plot it down. And dollar strength is what we're gunning for. So this definitely is a setup that falls in line with our bias. So I'm gonna start moving the chart so you can get this down on your trading view or MetaTrader, and we'll keep it moving. Toronto traders language. Oh yeah. If I start bringing out the slang in the live session, we're done for. U.S. oil. We'll give it a look. U.S. oil has been great to us, by the way. So alright, that's good. I'll save this, and this will be sent on Telegram as well. If for some reason you're not in the slipping and it's slipping again, wow, what the? Damn. See, did I give another short for this pair? I feel like I did. 31st January. Oh, this was given on Friday. Okay, well this is I guess another setup that was given on Friday. That's almost at its final take profit. Now, if you just check the shorts that we've gained for U.S. oil, we caught the huge short from here to here, which we got out, like amazing profits, and we got the short from here all the way down to here. And then on Friday, I gave someone a setup to this next support level. So that's 3 winners for U.S. oil, probably all totaling 1,000 or more pips, for being honest. So yeah, if you just put this 31st January, that was Friday. So yeah, we did have that short. Came back, retested, and then just melted. Look at this thing drop right as we speak. This thing is dropping 10 pips by the second. Ridiculous. This is the markets. It's a bear market. Get used to it. I mean, look at that daily closure. Just look at this thing. Look at this thing. Come on. Holy shit. I've never seen this. And the last time I saw something like this was when Trump attacked Syria with like 300 rockets and drone strikes. But this is ridiculous. Wow. All right, let's see. I mean, the reason why this was a target level was because it was a major support. You can see all these wicks back in 2018. I mean, if you look even to the left, try to squeeze this down. Even to the left, we had multiple instances back in 2016 as a resistance. So obviously a major level, and we're coming right to it. You know, we're not even being shy about it. We're just smacking on the door and knocking. That's just crazy. U.S. oil just slipped, like, amazing. That's amazing. Technicals, man, it's crazy. So anyways, I guess for us, the next simple setup is going to trade with the trend. It's looking for a short after this level is broken, and very similar. I feel like I'm saying the same thing again, and I'm beating a dead horse. But it's a bear market. What are you gonna do? Sell off. And what we want is just a bearish closure below this level, and we're good. And ideally, since it's U.S. oil, 50.32 per barrel. You know, we've used that support. We've always wicked below it, but we never closed below it. We never had a body closure below. Until we finally got the body closure below, I guess what happened, a huge sell-off. So that's what we're looking for. The same scenario. Price tends to do what it has done in the past, and that's what we're looking for. The stop loss could actually I mean, if you do these swing trades, any of these swing trades, they'll give you better returns than an RSP, a TSA, even some S&P 500 funds. Dude, this is, if you swing any of these trades and you do the risk management, the payoff can quadruple some of these ETFs that they offer at your bank. But that's U.S. oil. Let me know if that's what you think. Who asked that? Samir Kesam. So we'll take a look at gold, and then I'll give everyone the 25% off coupon code for the first month off in the trading room. Quick note about that: forexlens.com/forex-trading-room. You have two options. Sign up for a free membership so you can sit in on the Monday and Friday sessions. If you want the Tuesday, Wednesday, Thursday, the sessions where we enter trades and all of our signals, mine included, get the full access for $97. I'll give a 25% off coupon code at the very end, and this will be around $72. So that's a pretty good deal right there. And we have our portal right where the session is actually hosted. Right now the chat is being. This is not the chart we looked at. Let's see where it is. This one. Where did our gold go? It should be this one. All right, this one. So awesome. So just covering from the monthly time frame, we have a long bias depending on what the monthly closure for January is, and it was pretty bullish. Awesome. Now the only thing that's going to stem in between gold hitting 1800 and it coming back down maybe to 1500 is one, the dollar, how strong it gets. Obviously, if it's gold spot versus the US dollar. So the US dollar gets stronger, obviously gold should slip, but it's not always the case. Sometimes even if the US dollar is strong, certain things in the economy will fuel gold up, and that's mainly global tension, trade wars, coronaviruses, SARS, potential war. But obviously, for our sake and just for our bias, we do want February to be a confirmation candle. It could very well just be a retest candle, which makes sense. So it's a break, retest, and then March will have that upside. But we'll see. I don't want to take anything intraday for gold if it's not a short. I did say this to you guys, just because it's going against our principle of trading with the trend. And you can see last week we did have a potential short here, and we got pretty close to take profit one, but close is not enough, and we did get stopped out. So this is a trade idea we took many times in 2019 with a great deal of success. But this time around, when you're dealing with a lot of political stuff that's fueling gold strength, it's hard to trade it in terms of technicals. So I'm not even going to trade any of this. You can still see it's pretty much indecision with these last few for our candles. But me personally, I'm going to be staying out of gold unless we get a long. And the only time we're going to be looking for longs is if we get a closure above this blue region. And we did so on Friday, but we don't trade Fridays, and for good reason. You can see we had a push up and a complete sell-off. So for us, we're going to be looking for longs above this blue region. If we get it, cool. If not, that's fine. The only time we'll take a short is if we go to the daily. The only time we'll ever take a short is if we get a closure below 1550. And this is our original target. If we get a closure below, then we may thinking of changing our bias for 2020. But until that is taken out, we're going to keep a long bias. And so right now, the daily candle will do what it has to do. But much of this week's fundamentals will dictate whether we pop up or pop back down below. And so I'm not ignorant. I'm not completely against the short, but it has to be convincing, and more so, it has to close below 1550. So that's just my opinion. The weekly candle is just a retest candle, in my opinion, as you can see right here. I'm sorry if I'm moving too quickly, but you can see I don't want to bore people, but this was the break above the key level, key resistance at 1578. This could just be a retest candle, and then next week we could have a candle come in like this to confirm we're going higher. So that's all I'm waiting for, really. And yeah, so that's gold. So Rita, you tried to use a code last time, but the payment page wouldn't let me put in the coupon code. That's weird. Here, let me actually just give you the code again and give you some instructions. All you do is you fill out this short form. I can probably just do this really quickly. I'm just gonna put some random stuff right now, but obviously make sure this is all real information. Trading Room 97, how did you hear about us? Instagram, But please, guys, when you fill this out, make sure it's real info, even your number and your email, because we do send out offers from time to time to our loyal customers, and you don't want to miss them. So we're going to click next. Okay, so when you get here, Rita, it's very simple. Just scroll down and you click enter coupon code, and you click 25 off. 25, so 25, capital O, capital F, like this, and just hit enter on your keyboard, and you should see first time user 25 off, and it will subtract from your balance. So 72.75 is what you owe, and then just fill out your details and click submit, and you should be good to go. And then you'll get an email with login details and instructions. But that should be that. So I think everyone's good for now. Someone asked pound yen. Big G Dub, what's up, my dude? I'll look at that. Have you had a chance to maybe sign up for one of our memberships? I see you're pretty active. You're just getting in the sample, but if you get in the midst of the week, you're getting some nice juicy setups. And so, looking at pound yen, this looks like a good short just off the weekly. And there you have it. There you have it. So. It is, so our last short was from here, and we did have a nice chunk of profit made, but this time around we're getting that full move. So this is just history repeating itself. As you can see, last time we traded this support break, and we got around 45 pips, and then we reverted and our partial got stopped out. This time around, very similar setup, same levels, same price action, different result. We're getting almost the full take profit that we imagined. So pound yen, an awesome setup. What better setup there is to trade than pound yen right now? Coronavirus is going to increase the yen strength as a safe haven. The pound is going through Brexit negotiations, post-Brexit negotiations. This is awesome. So for us, obviously this first idea is done and dusted, and so the same thing again. And I'm beating a dead horse here, but it's all we're looking for is a bearish closure below this level. I'll remove this, and for this, because this could be a fake out and we have to be careful, I'll personally let you guys know tomorrow if the setup's a go. Actually, you might not need that. Yeah, actually we don't need that. We just need a bearish closure. That's all we need. We need a bearish closure below 141.100, ideally at 141.068, maybe even below, just to be safe. Let's go to a nice psychological level. So a bearish closure below 140.000. If you get a bearish closure below there, please enter short or stop loss. Let's just put it like that. It's 2.65, and we'll look to the left for take profit levels. So we're using these previous resistance as one take profit level. The next one will be some sort of support right here. You can see the support right here. And then we'll do some intermediate support on the hourly time frame. So we'll just expand these levels. We have a nice resistance here, a lot of wicks, first take profit. The next one is a secondary resistance, a lot of wicks through this area. The next one is the secondary support. You can see a lot of wicks here. And then the next one is the primary support, a lot of wicks in this area. So those are our take profit levels for pound yen. Let's see how it goes. And still 2.65, that's amazing. So I'm going to save this idea as well. Thank you for mentioning that. Big G Dub, get in on that 25% off. If you're a first new time user, we also do have a potential 50% off. You have to chat with Allison on forexlens.com and he'll hook you up. So with that being said, that's the end of today's session. So all the paid members, I'll see you tomorrow. Hopefully the chat is up and running. To the free members, this is a great week. Don't miss out. But if you do, I guess I'll see you on Friday. You'll miss out on a lot of juicy profits. I have updated my pip count on my website. So if you want to see what kind of results you've had recently, go ahead to forexlens.com. Go to Forex Signals, past results, and you have all my results there updated to last week. So with that being said, guys, I'm RP Forex, your host for the Trade Room. See you guys tomorrow. Have a great day, and peace.